Hi everybody, thank you for waiting for me. Sorry I'm running late. And thank you for giving up some of your time today to spend some time with me running through Shawbrook and what we can do. So it would be a great opportunity just to kind of recap what we can offer. Having a few technology issues, so I don't think you guys can talk to me, so I'm just going to talk at you, but I am here all day, so if you've got any questions or any cases that you want to chat through, please do pick up the phone and pick my brains. So who is Shawbrook and what do we do? Well, we're definitely not a high street lender, so we're not up there with your BMs and your Godivas and Accords of the world. Probably not even quite in with the Fleet and the Kent Reliance guys, to be honest with you, but we're just slipping in underneath, and we would consider ourselves very much a specialist buy-to-let lender and commercial lender. So what I thought I'd do today is just cover off the kind of typical Shawbrook client profile and run through the kind of things that we can help with. Key thing to bear in mind is we like to work with experienced property professionals. So somebody that has some experience, so whatever they're looking to do with Shawbrook, we like them to have done it before. But that can be an individual, a partnership, we've got no restriction on the number of partners, it could be a limited liability partnership, it could be a limited company. Probably one of the only lenders that are quite comfortable lending to a trading limited company as well as an SPV. We can lend to an offshore company if we've got a beneficiary in the UK, the ultimate beneficiary in the UK, and expats as well. But on an expat, they do need 2 UK-based investment properties. So experience to us is a minimum of 1 property rented for 12 months for what we would consider a straightforward buy-to-let. The more complicated the deal, then the more experience we would be looking for. So for example, if your client's looking at a house of multiple occupancy, a HMO, then we would expect them to have experience with a similar number of letting bedrooms. So 6-bed HMO, maybe 4 residential buy-to-lets in the background, or a HMO of the same similar size. If it was a commercial investment, potentially we would be looking for either experience of another semi-commercial investment or a small residential buy-to-let portfolio for a couple of years. We can look at a first-time landlord, although to be honest with you, we do want them to be owner-occupier of their own residential, whereas that normally isn't a requirement for our experienced landlords, and we're looking for a minimum outside income of 50,000. That would be the only instance, along with expats, where we have a minimum income. Normally, we're just looking for the client to be able to demonstrate they've got sufficient personal income to cover their personal expenditure. So, older couple, maybe they've paid off their mortgage, they're retired, living off state pension, that would be absolutely fine, as long as their bank statements show that they've got enough income to cover their personal expenditure. So a couple of things that crop up. Age, we can work to the 80th birthday of the youngest applicant at the end of the term. So we're particularly good for succession planning, or if you have examples where you've got perhaps a mum and son arrangement, mum's getting on a little bit and perhaps the son is, I don't know, 40, 50 years old, we could still do a 30-year interest-only term on that basis. We have no maximum age for the eldest applicant. Kind of things that also fall out of bed with the high street concentration. Maybe the client's got a large buy-to-let portfolio, maybe they've already reached the maximum number with that particular lender. We have no restriction on the outside size portfolio, and we have an appetite to lend anything up to 15 million to a single entity with Shawbrook. I have actually seen us go higher than that as well, so there's definitely scope there for the right clients. Concentration often comes up, especially around kind of blocks and flats and neighbouring properties. So maybe your client owns their residential and it's number 1 and they have a buy-to-let which is number 2 next door. That would be absolutely fine. Maybe they live in a block of flats, maybe there's 5 in the block and they've got 3 of those as buy-to-lets as well, and the 5th one is owned by a third party. That would be absolutely fine as well. We also get involved with things like multiple units on 1 freehold title. And we have no restriction on the amount of units that can be on that freehold title. So if that block of 5 was owned by your client and it was all on 1 title, that also would be absolutely fine. We've got no restriction on the number of bedrooms for HMOs. I think the largest HMO inquiry I've seen is a 22 bedroom, which was enormous. And we can also look, as I mentioned earlier, at semi-commercial and commercial. Now, one of the reasons we're quite popular on the commercial side of things is we can do interest only on our semi-commercial up to 75% loan to value. We can do a term that extends the length of the lease and the break clause. We might have a 5-year lease with a 3-year break clause, but we could do a 10-year interest only deal for that client. And we tend to be able to gear a little bit higher than the high street. So interest only 75%, that does make us very popular. So a couple of other things to bear in mind. Like I said, maximum term is 30 years, max LTV is 75%. We can look at doing 100% if we can take some additional security. That works particularly well on our short-term products, which I'll cover off in a second. So it might be that they've got a portfolio in the background with lots of equity. We can go up to 70% loan to value as long as we can take out a minimum of 25,000 by way of a charge. All of your clients will be tied into Shawbrook for a minimum of 5 years unless they select a 3-year term. So even if they did a 3-year fixed rate, there would be early repayment charges for the first 5 years. So you do need to just be aware of that. We do, however, allow overpayments of up to 10% each year of the outstanding balance. So the other area where we're really strong, and definitely a sweet spot for 2017, and I think a lot of your clients will probably be talking about this, is buying on short-term products where they spot an opportunity to add value and then either term that out onto a standard buy-to-let mortgage or sell it with a gain. So we tend to split that down into 3 distinct categories. The first one being a ready-made kind of let property. That could be an auction purchase where they spotted the opportunity to get a planning gain, so they could potentially split the land off and develop the land. Maybe you've got an experienced developer that's already completed a development and they're looking for a developer exit, so they want somebody to pay off the expensive finance and then afford them a period for sale on the market, which we could do, and rates on those start from 0.59%. We also do a light refurbishment product, so that could be anything from kitchens, bathrooms, central heating, rewiring, and typically those tend to take less time, so that might only be a couple of months to do the refurbishment, and then they would be looking for a lender to also be a term exit. Now we can do that because we don't have a 6-month ruling. We can step in and refinance on day one if needs be. And we also do a heavy refurbishment, and that's specifically for where they're looking to spend maybe more than 15% of the value of the property. So maybe a larger extension. Maybe they've got experience and have spotted an opportunity where they've got an office block with permitted development rights. They want to convert that to residential. It might be that they've spotted a residential property and they've got experience in turning those into HMOs. And that is definitely an area where we're seeing a lot of activity at the moment, to buy cheap and then end up with a higher yielding, higher valued property. We also do regulated bridging, so nice straightforward traditional chain break, auction purchase and downsizing. Key thing here to bear in mind is a maximum term of 12 months and the client's max age is 75. For the rest of our short-term loan offering, it is a maximum term of 24 months and we can roll up and retain all of the interest, and we have no early repayment charges. So we are extremely competitive in that short-term market. Now, what I wanted to do is just show you how to use the calculator, because this really is the starting point for identifying what product, what rate and how much we can lend. So in this instance, let me just tell you how to get here. If you go onto the Shawbrook Bank website, you'll be faced with a page that then asks you if you're a partner, and you go partner login, and then it's commercial login. This will get you to this page here. Selecting calculator at the top, and you'll see this page, and I'm going to look at the maximum I can lend my client in this scenario. So you can see that if you know how much you want to borrow, you can do a repayment calculator. If it's a short-term loan, we'll do the short-term loan calculator. Got my applicant. In this instance, I'm going to select individual, but you can see I've got a category for limited company. That is really important because the stress test for limited companies is different from individuals, so please do select the correct category. And my loan type, this is a residential investment, so a buy-to-let property, but you also have the option there of trading business and regulated bridge. So this is the bit that puts most people off, because we've got a lot of different property types there. In reality, most of what you're going to deal with is a single dwelling, house, flat, and they come there. You'll also see HMOs, so you've got 6 bedrooms or less, 7 bedrooms or more. That's really important because that helps us identify which product. And you've got your residential portfolio. So a client looking to secure one loan over several properties would come under that category there. So in this instance, I'm going to do a house, and I'm going to do a purchase price of 250,000. Now, my term, really, I want to be selecting 10 years in all instances, because that will also allow me to quote using the 5-year fixed rate with a 10-year term, which might generate a slightly different loan from my shorter terms. So you've got repayment method here, interest only, part and part, or capital. Please remember, if you select a repayment mortgage, we're going to stress it on that basis, so that will impact on the loan amount. Any existing Shawbrook client will be eligible for either a discount off the margin or the fee, and that could be a loan, secured loan, mortgage. It could be any product from Shawbrook Bank. Your broker fee would be 0. Now, I know you guys charge on application and offer, but this fee is referring to an amount you'd like us to retain from the mortgage that's advanced to the client. And then you've got your rental income. Now, bear in mind, this is annual rent here. So in my example, I'm going to use 10,000. You'll then notice 3 boxes. Is this a simple residential investment? Is it an expat? And do they have a portfolio? If you need help identifying what we would consider as simple or specialist, please contact me, the sales desk, or the guys here in the office. We can help you with that, and then we can calculate. Now, you'll notice here it's given you a little bit of a heads up. The legal fees are an indication. That is not set in stone, so please manage your client's expectations when you're quoting the legal fees. Shawbrook will instruct Pure Law to act on our behalf in every single instance. So it is important that you're aware of that. And that's generated me my residential investment 0 product. And you can see here that I've got a LIBOR tracker with a LIBOR floor of 0.75. So a little bit of inbuilt comfort for your client there. A 3-year, a 4-year, and a 5-year fixed rate. You've got your loan advance, but more importantly, you've got your estimated net advance, and this is the amount going to the client. So in this instance, you can see we can get to 128,000. You've got your monthly cost and your fees. So the commitment fee of 321.46 is paid on production of the fully sanctioned mortgage offer, and your lender fee is added to the loan. Now, in this illustration, this straightforward example, you can see the legal fee is 425, and that is the amount that's been retained between those two there. Okay, at the bottom of the page, you'll see the e-quote. This allows you to go through our automated online agreement in principle and generate terms for your client. You've also got a print button. This allows you to do a PDF, which you can retain for your file, or if it's just a quick chat with a client, you can also provide that one. What I'd like to do now is just show you what happens if they have a portfolio. So you can see now, by selecting that they have an existing portfolio, I've got 2 options, one in their personal name and one in a corporate portfolio, so limited company. So in here, I'm going to say that our client's got 750,000 with a debt of 400,000. And they are now looking for monthly rent. So don't get tripped up there, guys. So monthly rent, I'm going to pop 3,000. I have to put 0 in here. It won't assume for you. And then I'm going to calculate again. It's really important we get that information accurate, because what's now going to happen is it's going to generate the option here to stress using the pay rate on a 5-year fixed rate with a 10-year deal. So you can see that our estimated net advance has increased from 128 to 144. And you can see at the bottom that we're stressing at the 4.39. Great, well, that's all I wanted to run through with you today. Like I said, I'm here all day. If you've got any questions, please just pick up the phone. Hopefully you found it useful, and we'll speak soon. Bye.